Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Ryan McCormack. He's the QQQ Equity Strategist over at Invesco. It's great to have you back with us as always, Ryan. And the Qs, they just continue to outperform in this market.
They do. Thanks for having me, Jill. It's been a fantastic run, really since this most recent cycle following '08 and the great financial crisis. Since then, we've experienced unbelievable outperformance against both the S&P 500 and large growth indices kind of around the world.
All right, let's take a look at a couple charts here. We have a year-to-date, 3-year, and a 5-year. And so let's take a look at our year-to-date right now.
As you look at the year-to-date, of course, we've had significant outperformance relative to the S&P 500. Really no surprise here in terms of what's driving the bus. And it's going to be our 3 largest overweight sectors. That would be information technology, consumer discretionary, and communication services. So really driving the bus, we're seeing a lot of, in terms of attribution, that's really what's driving this performance, and those stocks continue to roll.
All right, in the 3-year chart, looking at the same thing as well, that large cap tech really driving the way.
It really has been. Yeah, I mean, it's been pretty consistent when you look across those sectors. I mean, kind of our largest holdings, Apple, Microsoft, Amazon, really those are the ones that continue to drive performance.
All right, and our last 5-year chart, again, you can see that long-term performance, I mean, almost the entire way.
Yeah, absolutely. It's been kind of that long-term trend out of the financial crisis, and it doesn't really show too many signs of slowing down.
All right, this might be my favorite chart. Nasdaq 100, R&D, our next chart here. This is what's driving the growth.
Yeah, and I think this is a really interesting chart for us because you're consistently looking at what's driving this outperformance, right? So you can look, yeah, sure, these are the sectors, these are the names, but why do these names continue to outperform? And we believe that when you invest in QQQ, you're investing in innovation. So very hard to kind of quantify innovation, but we try to in looking at R&D. And what we found is Nasdaq 100 companies invest twice as much as the S&P 500 companies in R&D. So 9.8% of sales are reinvested back in these companies by way of R&D. And as you look at the companies that make up the Nasdaq 100, some of those names that I mentioned before, they truly are the innovators, the disruptors in the market. And what they've brought is innovative products, innovative strategies, and as we like to say, innovative ways to make money.
All right, let's go to our last chart here, and it's translating to the bottom line, revenue, earnings, and dividend growth. That's what every investor wants to see.
Yeah, absolutely. So, again, it's very hard to quantify where $1 of R&D goes, but, in order for these companies to stay competitive, they need to be reinvesting. So you look at, a name like Amazon, right? Today looks a lot different than it did 5 years ago. And I think a lot of that is driven by that R&D. So when, at the end of the day, it does trickle down to the bottom line. You're seeing significant revenue, earnings, dividend growth, much higher than S&P 500 and Russell 1000 growth. So, it's working.
That dividend number is really big.
It's huge.
I mean, blue chip, older school stocks, people invest in them because the dividends, I mean, they're 400% or 500% higher in some cases.
Well, I don't think you're buying QQQ for the dividend yield anytime soon. But that being said, these are names that, if I told you 10 years ago they were going to initiate or grow their dividend, you would have told me I'm crazy. But this is kind of the new age that we're in, and they've found a way to monetize all that R&D, and they're finding ways to return value to the shareholder in this form, dividends. All
right, while we have you here, a couple of high-level talking points. Your thoughts going to 2020? Seems like it's going to be an interesting year.
Yeah, I think so. The house view is obviously everybody is looking at China. It's been a very headline-driven market, but as you kind of look, beneath that and under the hood, we expect the U.S. economic cycle to continue. We think it's going to be kind of driven by an accommodative Fed, and beyond that, a really, really strong U.S. consumer.
All right, Ryan, great to have you with us as always.
Thanks again, Jill.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.